Good evening and welcome to the Accendo Traders Group. This is our daily stock market wrap-up for Monday, November 30th, 2009. Our website is a blog at accendotraders.com where we put together video technical analysis trading plans on a daily basis. Our trading plans help us stay focused and disciplined, and allows us to keep track of what's going on with our positions and what is going to happen in the market that could affect our positions the next trading session. And it helps us cut down on our review time so we can spend time with our family. The day that was. Well, the dollar fluctuated, and is it a coincidence that the market fluctuated right with it? I say no. You guys know that we've been talking about this for the past month about right now the catalyst. With lack of earnings, with lack of economic data, the dollar has been the catalyst. And again, today we really didn't have any real news to move the market. Now, you say that, and you say, but what about the Dubai financial crisis? Well, you have to remember a couple things. First of all, the initial reaction was overseas, and it was on what is the American Thanksgiving holiday. And so Friday, although we had a reaction, and we had the market actually rally and then kind of close closed basically where it opened. Friday was a reaction because you have to think about it that there were a lot of people who logged in on their computers, maybe not in the pits, but logged in on their computers to find out what the heck was going on when they saw the market down 200 points on Thanksgiving. So now we're a couple days in, the weekend has come, more news has come out, and although it's still not certain about what really went on there and whether or not the rest of the markets, the credit problem has returned to these emerging economies. Remember, Dubai is only 38 years old. The market has really kind of divulged it, dissolved it, whatever word you want to choose, and has moved on. And that's what when we'll look at the overview and we look at what stocks and sectors were up and down. As you can see, 6 of the 10 were up. Well, one was the financial sector, and if there's going to be a sector that's going to be affected by the credit problems of Dubai, it would have been financials, and we didn't have that. Not so much again, on the earnings front. Tomorrow, we do have some news out tomorrow that could move the market, especially in the valley of not having anything, the vacuum of not having anything. But I think the big thing is going to be on Wednesday when we have the ADP numbers. So when we begin with our overall look in the market, we go first to our FinViz, and we can get our little Rubik's Cube here. And you can see we kind of have a blend. It's definitely our financials. Look at JP Morgan, Bank of America, Wells Fargo, Goldman Sachs. Down here in our bottom left, we had a lot of green, which certainly helped keep the market up. But for the rest of the market, you can see is basically just a mixture of green and reds and some unchanged. And then when we look at the three together, S&P, NASDAQ, and the Dow, we can see that we kind of start off at open, went up, kind of fell hard here going into the lunchtime, and then we retraced for the rest of the day. Some nice failures that we'll look on the intraday charts. And again, looking at our advance and decline, 51%, so you can see it kind of in the middle. Our new highs, still have a lot of stocks making new highs, and basically in the middle for stocks above the 20 moving average. As we switch to the daily charts, we can see two things on the Dow Jones. One, and first and foremost, we see that we're still within the wedge. This is the uptrend line from the March lows of this year, and this is the downtrend line from the October 27 highs. So we're still there. You can see Friday's action and today's action both pulled down to the 20 moving average, and we found some buyers there. But also notice that our volume, we're going to remove some of what happened last week because obviously it's holiday buying, so certainly the volume is going to be down. But today the traders should have been back, and we still see low volume. Now on the NASDAQ, the volume does show a little difference there, but again, you got to take out Wednesday and Friday because of the holiday, and we still, compared to what we've had, we still have lighter volume. It is good to see that the 50 held up as support both on Friday, got down to the 50. And we retraced, and today we came down to the 50 and we went back up. On the S&P 500, you can basically see that we are still in a range. 20 is still holding up as support, although both Friday and today's action did break through the 20 moving average. But That was kind of what we talked about before, both on the NASDAQ and the S&P 500, that we were consolidating in a range, and we broke out of it real quick and then came right back into it on the NASDAQ. And on the S&P 500, same type of thing. We're sitting here in a range, and again, put your lines at 1,025 and above last week's highs, and see if we can play the breakout. And quickly switching over to the monthly chart, we see on the S&P 500, maybe we're gonna the end of November here. Maybe December will complete this run to the 50 moving average. But again, now that we are all the way through November, look at this volume. Really, September, October, November. That's not a great indicator. That technically is bearish. You can see with the NASDAQ, same thing. September, October, and November volume going down. And finally, with the Dow, you can really see this October highs, March lows, sitting right here in the middle of that, also sitting at the 50 moving average. So December really should break us out of this one way or the other. Now as we go to the internals, you're going to see, you know, a huge increase in volume, but again, that's compared to the half day of Friday. So certainly we're going to see increased volume. Also, you can see that we do have, you know, bullish breadth, nothing to write home about, but certainly nice. We still have stocks making new highs. That's certainly good. 500 is not a great number. So what I'm basically trying to point out to you today is that we end in November, and the last day of each month usually is a window dressing day because people are closing out for the month. But what we didn't see is a real conviction of traders coming back in the market after the holiday Thanksgiving to say, you know, yay, the Dubai concerns are just a hubbub, and we're ready to finish this, the winter holiday run and run into December. So we still have not yet seen that. Maybe December 1st will be the first. And of course, we know this week with our ADP on Wednesday and jobs on Friday, maybe that's when the volume will return, but we're still looking for that volume, still looking for that conviction. As we look at the market intraday, one of the things that was hard about today was the confirmation of a trend. I have a great video. Go to the website, blog.accendotraders.com, go to YouTube, and I have a two-part series on how to draw trends and how to use trends to enter your trade, especially as futures traders. And one of the things you're looking for is concert. 5, 15, 60 minutes. You would love to see these in concert showing up or down. And the only time we really got that was on that big push down. Similarly, you can see, you know, we've been a big proponent of pivots. And here you can see on this push down, we pushed right down to the pivot. Even on the open, we pushed down to the pivot, air kissed it to move up. And then we had some failures. And even if you didn't want to play this failure here, what you want to do is think about support and resistance and say, okay, if I break the pivot, I'm going to go bearish. We didn't. And then maybe you will wait for us to get above the swing high and say if it gets above this, I'm going to go bullish. Would have worked out. Same thing here. We got a failed new low. That's, and even if you don't want to play immediately, if you would have broke these swing highs, this little consolidation pattern, you would have been fine also. Check out the blog to get more information on that.